Yo, what is going on, everybody? It is Tuki here. Welcome back to another video, a part of the Supply and Demand Bootcamp. For today's video, we are going to be covering trading with supply and demand in terms of looking for key confluences, in terms of where to put your stop loss, your take profits, your exits, etc. So going to be going in depth on pretty much just how I approach trading with these supply and demand zones. If you don't know who I am or you're new, I've been trading since 2020. I've been trading with supply and demand since 2022, and ever since then, the past 4 years, I've continued to just build my system around trading with supply and demand and best understanding supply and demand within the market. So we're going to be going over two different key examples, obviously one being a supply zone, another being a demand zone, and pretty much like I said, just explaining to you guys how I would approach trading with these zones. So let's go ahead and start with looking for confluences within our supply and demand zone. Now, one of the main confluences that I use when trading options, not so much futures, is looking at level 2, seeing what level 2 is displaying to us. Level 2 is essentially just understanding the data within that specific candle that price is currently presenting. So obviously we can't really go over much of that today. I'll be going over everything else. So let's start with a couple of key confirmations that we can use. Now, right here we have this supply zone, which is a 5, 15, and 30-minute supply zone. Okay. One of the biggest things is we want to look for some sort of key level to utilize as an entry point inside of our specific zone. So, for example, right here, if I were to zoom in, we can see that within this supply zone here, we actually have a bearish gap that is created on the 5-minute. So let's go ahead and mark out that bearish gap, which is inside of our supply zone. Boom, boom, extend that all the way out. Now we have our bearish gap, right? So that's one thing. Now, another is obviously really having a good overall understanding of what price action is doing within that specific zone. A really good way to identify this is narrowing it down to the 1 or 5-minute time frame. 1 minute is honestly going to be more ideal just to get more of that shorter term overall understanding of what the candles are doing, to see whether we're actually showing signs of selling strength or buying strength. In this case scenario, it's a supply zone. Therefore, we want to start to see signs of selling strength, obviously, right? So in terms of for our entry, let's say we are looking at, we're so far understanding price action, we're understanding to see whether there are any key levels within our supply zone that we can best utilize for our entry. And then also for my stop loss, this is the great thing about supply and demand too. My stop loss is almost always in the same spot when I'm trading with supply and demand. And that's just simply in an invalidation above our specific zone. So let me go ahead and just do a little replay on this so you guys can kind of see the thought process on this. Now, like I said, I'm going to mark out this 5-minute bullish gap as this blue zone right here. Oh, whoa, what just happened? So this blue zone will be our 5-minute bullish gap, okay? Let me see here. What is going on, gang? Okay, cool. So the blue zone is the 5-minute bullish gap. The red zone is obviously our 5, 15, and 30-minute supply. Now, we would ideally want to see price obviously retrace and tap into this supply zone. So let's start to see that. Not yet. Boom. So we just tapped into that supply, and we also just tapped into our bearish gap. Now, what we want to see here is signs of that buying pressure start to slow down, because obviously leading up into this supply, buyers were overall in control. There is clearly on this move up more demand than supply. Now, like I said in one of the previous videos, we want to see that scale of demand being stronger than supply start to flip. since we're trading off of this since we're trading off of this supply zone and we're anticipating a rejection back to the downside, we then want to see that scale be more supply than demand. We want to see some selling pressure, selling momentum start to be inputted, right? So let's go ahead and slow this down. Now we're on the 5-minute. Another thing we want to see is we want to see price fail to break above that supply zone. Because what that exactly means, if it fails to break above, it shows that those sellers are active within those zones. Or yeah, within that supply and demand zone. Think of your supply and demand zone as a barrier within the charts. And just like a regular barrier in real life, you need a lot of momentum, a lot of force to push through and break that barrier. Same thing with your supply and demand zones. In order for price to break through your supply and demand zones, we would need obviously buying momentum to be super strong or selling momentum to be super strong leading into those specific zones. Now let's say, for example, we push up and we don't get that buying momentum to continue to push us up and break through, we start to see signs of price slowing down. We start to see signs of sellers starting to step in. We start to see signs of price respecting our levels in our zone. When I say respecting our levels in our zone, I mainly just mean price is continuing to hold inside of our zone and not break above it. Because as you can see, price was super bullish leading into that zone. Where did that bullish momentum go now that we're in that zone? It started to slow down due to the fact that those sellers started to become more active, right? So if we play this, price is still holding inside. Let me speed this up. Okay, yeah, there you go. Let me go back just a little bit, just a little bit. Okay. So go back just a little bit. And let's go to the 1 minute as well, okay? Because like I said, on the 1 minute, we can get a better short-term understanding of what price is actually doing. So let's zoom in a bit, and then we'll let it replay. So price holding inside of our zone so far, start to see signs of selling pressure, which is really, really good, okay? Which is really, really good, because obviously we're anticipating the supply to provide us with that selling pressure to then look to go short, right? So we're starting to see signs of selling. And we're also starting to see price fail to continue higher and break above our zone. So it does its thing. Price is still holding inside of this supply, which is another really good thing you want to look for. If price continues to hold inside of your supply or demand zone for a good amount of time, that is a good confirmation to you, because it shows you, it indicates that, okay, leading up, buyers were overall in control. We had good buying momentum going into that supply zone. Where did that buying momentum go now that price is in our supply zone? That buying momentum slowed down because that supply area that we have marked out is an area where the market movers, big banks, institutions were looking to utilize. When I say utilize, I just mean looking to enter in to their big positions at that point. When they're entering into those big positions at that point, they're obviously the market movers. They're entering with hundreds of millions of tens of millions of dollars, right? Like I always say, money is what moves the markets. The more money that is being inputted into the markets, the bigger moves we're going to get, and the higher volume is going to be presented to us. Obviously, as the traders we are, we want to be trading when volume is high. We want to be trading when price is presenting those bigger moves. No one wants to trade and shop. So boom, let's go ahead and continue to play this. Now let's also do an example as if we were to take this trade, right? So for me, I start to see price holding inside of this bearish 5-minute gap as well. Right here, which is that blue zone, we're holding inside of it. We're failing to reject. We're also holding inside of that 30-minute supply zone. We're failing to reject and break above. Or sorry, we're not failing to reject. We're failing to push up and break above, right? So let's say I were to take this trade, because obviously, A, we have our supply zone matched across multiple different time zones, which is one really good confluence. We have a bearish 5-minute fair value gap mixed within our supply zone, so a key level mixed within each other is another confluence. We also see price starting to slow down in terms of buying pressure and start to see more signs of selling pressure, which is another good confluence. So that's 3 confluences stacked up within each other, okay? Another really good one is we can see risk is very minimal. Like I said earlier, my stop loss when trading with supply and demand is almost always in the same spot. That's going to be either a break above supply if I'm trading with supply, or if I'm trading with demand, it will be a break below demand, invalidation below that demand, or invalidation above that supply. So in this case scenario, I want to target the previous lows that price previously created, okay? So we can go ahead, mark out these lows right here, or if I wanted to look for something, a bit bigger, we can even go ballsy and target these lows down here. But for this example, let's just go ahead and target these lows because that's still a really, really solid trade, okay? So we're targeting these lows. Why am I targeting these lows? We had strong lows being created here, obviously also then led to a strong push to the upside, This would be like a 1-minute demand right here, okay? This would be a 1-minute demand, so we can mark that out. So obviously knowing that we have this 1-minute demand here, we can target this area as our exit point, so in case price does reverse at that point, we can exit at the best point possible before price does reverse on us to really maximize the trade that we're executing on and also, of course, the profits that we are getting. So let's go ahead and play this trade out. Price still holding inside of our zone very well. Starting to move up a little bit, but obviously stop loss is in place, right? Stop loss is an invalidation above our supply, still holding inside of our supply zone very well, still also showing decent signs of selling pressure. Selling pressure obviously just being those bearish candles, bearish wicks that are being displayed within that supply. Now we're getting some serious selling pressure right here, right? Now we're getting some serious selling pressure right here. Another thing that I do, or that you can do, is the first candle that tapped into that supply zone, for example, the first candle that tapped into that supply zone, you can mark out that candle low, right? So it would realistically be this candle right here. But what we can also do is we can mark out the low of the candle that tapped the zone as another good confluence, because also once price pushes below and breaks that low, we're likely to continue with that further continuation down. But what you can do as well is, for example, we had that bearish 5-minute gap. You can either target if right now we have a supply example, right? So you can target the bottom of the supply zone or the bottom of the key level that you have. In this case scenario, we have the bullish 5-minute gap. The bottom of that 5-minute gap is right here, right? That's where that bearish 5-minute, the bottom of it. We can go ahead and mark out the low of that gap, right? Just to show you guys so it makes more sense. We have right here. So we have this 5-minute gap created. We can mark out the low of that 5-minute gap, which I just did, but I just want to make sure you guys see it even more. So boom, mark out that low, and we can also treat a break through that low as another confluence. If you want to enter previous to that break, that is still fine. You can still anticipate a break below that low, and once we do get that break, it still gives you more confirmation that that trade is likely to still continue moving. Okay, so we have that low there that we marked out. We see signs of selling pressure starting to be inputted. Our stop loss is obviously in place. Our take profit is in place, and boom. go ahead and play this out. For me, whether this is futures or options, wow, that thing literally printed. For me, I am targeting the nearest previous key level as my take profit level, as my partial point. Let's call it our partial point because this is our full take profit down here. So we want to have at least a partial point or a point where we can move our stop to break even. So in this case scenario, we see that there are equal lows created right here, which ultimately is a support level being created. So let's go ahead and mark out that support level, and then that can be either our break even level or our partial level. We see price continuing to move down beautifully. Let's go ahead and continue to play that out. And boom, full TP hit. Now this should even continue lower. So if you want to target these lows down here, beautiful. And TP should be hit shortly. Looks like we're getting a slight rejection back to the upside, but it's completely fine. The biggest thing too, we are still well below that supply. We're still well below that supply, meaning sellers are still overall in control. Buying can still be inputted. We can still have small, push-ups to the upside. The fact that we're still trading well below that supply and haven't really tapped into any major demand areas still indicates sellers are overall in control. Now we do have, I actually took this trade. I literally took this trade. So we have this 5-minute demand that's created right here. We can see strong low, then led to an aggressive push up to the upside. So we can mark that out. So we now know that we have a 5-minute demand right here. That 5-minute demand, which was initially what provided us with price being a little hesitant at that level, getting that slight rejection. But like I said, sellers are still overall in control. Sellers are still overall in control. We play that out. Boom. There you go. So there would be full TP going into that 5-minute demand. Now let's see if price even pushed lower. I believe we started to push up from here. Let's see. Yeah. Did we break these lows? We did. We did. So as you guys can see, from that supply up here, mixed with that bearish 5-minute fair value gap, mixed with supply being plotted across multiple different time frames, obviously gave us the confirmation that that was a high probability zone. We matched our confluences together, which was looking for a tap into our key level, which was the bearish 5-minute gap, alongside with the supply zone on multiple different time frames. We had gotten the break below the low of that key level, right? We had started to see really good signs of selling within this zone. We had seen that price held inside of that zone really, really well, starting to show even more signs of selling and starting to just indicate to us that sellers are holding that level very well still, which is obviously another great confluences. So we just have confluences stacked on confluences, like stacked all together, right? And you can see that literally just printed. Now, like I said, why did we target this low down here? This was simply a key level I was targeting. I didn't just put my TP to a random spot, okay? I put it at this 5-minute zone because I knew, knowing there was a 5-minute demand there, price could provide us with some sort of reversal back to the upside, which it did. You can see it did a decent amount too. Although it never really got close to our break even or our entry point, and it still continued lower. If you're looking for more of just that quick trade, you can identify where the lowest point price will push to before price does move in the opposite direction, right? And that's exactly what we did. We targeted an area where price was likely to provide, where this level was likely to provide price with a reversal, It did provide us with that reversal, therefore that would have been a perfect exit point. If you were looking to hold this a little bit longer, by all means, that's fine. Obviously, every trader is different. That thing literally still printed. Literally still printed. Oh my goodness, to the absolute floor. Okay, so imagine top ticking this whole entire move, right? And the reason that this worked out so well is because, like I said, we just had confluences stacked on confluences. We had a high probability zone, which we were able to identify, which I have a complete whole different video on that. And the trade ended up working beautifully. Okay, nice. Now let's go ahead and do a demand example. It's literally going to be the exact same thing with supply, but might as well just get an example in so you guys can see. So right here, we have this 5-minute demand zone. Now within this 5-minute zone, we want to look to see, are there any key levels created within this zone, right? Now what we can see here is we're on the 5-minute, so let's go ahead and switch to the 1-minute, for example. We can go back. Wow, this was ways out, man. This was ways out. Holy. Is my trading view tripping? I think it's tripping out. Okay. Let's see here. Okay, here's actually another example we can do. First, we obviously want to identify our demand, which would be a strong low created right here, new strong low created right here, then led to an aggressive push up, as we can clearly see. Okay, so let's go ahead. We're on the 5-minute. We want to mark out this 5-minute demand, mark out that candle that started that move, extend it out all the way. We then want to see, are there any sort of key levels, any sort of fair value gaps that match within our current demand. Okay, as we see right here, we zoom in on that move that led us up here. We actually have multiple gaps, but we want to look for the level or the key level or gap that ultimately is closest to where our zone is. We can literally see pretty much within our zone, right above our zone, we have this bullish 5-minute gap. Okay, so we have the understanding that this price range, this price area as a whole, is an area where buyers ultimately were just stronger than usual, which is what we want to target. Okay, now let's go to the 15-minute, for example. Let's go to the 15-minute and let's also match up that demand across multiple different time frames. Okay, let's see. Okay, so 15-minute, strong low being created, aggressive push up to the upside, mark it out on the 15, boom, boom, extend it out. Go to the 30-minute, get even more confirmation on this zone, boom, 30-minute, strong low being created right here, mark out that candle wick, extend it out all the way, now boom. So now we have a demand zone matched within each other across multiple different time frames. Within that demand zone that we were able to stack across multiple different time frames, we have a 5-minute bullish gap. Okay, so now we have solid confluences stacked against each other. Okay, let's go back to the 5-minute, narrow it down, go back to that zone, which would be right here. Oh shoot, what should be right there? Zoom in. So obviously it was created right here. We then want to look for a retracement. We zoom in on this retracement, and as you can see, price taps our zone and our key level, which would be the bullish 5-minute gap, beautifully. We held within this demand zone very, very well. We started to show signs of buying. We failed to break below. This is the biggest, like one of the big things you need to understand as well. Look how strong selling pressure was leading into this demand. Look how strong it was. Sellers were clearly overall in control, and sellers were clearly strong on this whole push down. once we tap into that demand, where did that selling pressure go? Why did it get so weak out of nowhere? Because those buyers were waiting for price to tap back into that area here to then utilize that price point to start inputting an excessive amount of buy orders into the markets. Also just meaning excessive amounts of money being inputted at that price range, right? So boom, let's go to the 1 minute. Hopefully it doesn't cut us off. Not even sure where that 1 minute is. I don't know why it's doing that. Okay, either way. Boom. Confluence is stacked against each other. We had the demand zone across multiple different time frames. We had price failing to break below. Selling pressure obviously slowed down as soon as we tapped in, which is a great confirmation because like I said, selling was so strong. Once we tapped into that demand, it just like stopped, right? It stopped because those buyers started to really step in. That scale right here on this move down, like I said, sellers were in control, meaning that the scale of supply and demand, there were way more on this move down. Supply was clearly larger than demand. Once we had tapped in to this demand zone, the scale flipped. Demand started to increase and become larger than supply, which ultimately provided us with that move up, right? Now, you can see here, what I would do in this case scenario is we have, for the nearest key level, like I said, that's what I'm targeting for my take profit. So in this case scenario, we have a 5 minute bearish gap right here. 5 minute bearish gap right here. Obviously, if you wanted to target something a little bit bigger, you can target these highs up here. Now, I don't recommend you guys to always look for the biggest trades because price will provide us with reversals off of these zones. It's not always going to provide us with these explosive reversals though. I've shown you guys some solid examples where it has provided us with some really solid moves, but you never want to get too greedy. Just target the nearest key level. We also have this bearish 5 minute gap right here too, right? We have this bearish 5 minute gap. So you can target either of these gaps as your take profit, okay? Like I said, stop loss is almost always in the same spot. It's going to be an invalidation below demand, right? If it was supply, it would be an invalidation above. In this case scenario, we're trading with demand. Therefore, we would want to see a break below, invalidation below, candlestick closure below for our stop loss and for us to understand, okay, price invalidated the zone, therefore it's not a valid buying zone anymore. Okay, we can then take longs, boom, boom, entry right there. Once we start to get good signs of buying, once we tap in, we can target this bearish 5 minute FVG up here, and you can see trade hits beautifully. Ladies and gentlemen, I hope you guys learned something new from this video, found some value from this video. I will see you guys in the next series or the next part of the bootcamp. Go and catch some bangers. I'll see you guys next time.